Today, we're honored to sit down with Jamie Parker, the co-founder of Heron Data, a company that's making waves in the world of financial data, analytics, and insights. With a passion for innovation, Jamie's here to share how they've created the new standard for understanding businesses using their financial data. We'll explore the driving force behind Heron Data's success, the journey of building a groundbreaking company, and tips for thriving in a data-driven landscape. Heron Data provides lending businesses with a comprehensive solution for harnessing their power of data analytics, utilizing their bank data as the source of truth for the business. So join us as we unlock the world of data-driven innovation with Jamie Parker. Hey, Jamie, thanks again for joining us today.
Thank you, Steve. Thanks for having me.
Yeah, absolutely. I wanted to just jump right in and understand, the story behind Heron Data and what inspired you to create it.
Yeah, of course. So I guess to take a step back a little bit, Heron Data, our mission is to help small businesses get access to credit at fair rates, ideally quickly and as painlessly as possible. But we arrived at this problem through a relatively circuitous route. So my two co-founders, Dom, our CTO, and Johannes, our CEO, decided to start working together in early 2020, so just before the pandemic. Okay. And we had some experience in this space before. So Johannes and I had run a small business at university. Dom and Johannes had both worked in fintech. So Dom was the head of data science at Revolut, which is a big European fintech. Johannes worked at a fintech and then started a remittance company called TapTapSend in London. So we'd worked around the problem of both sort of fintech, bank data, which is what we specialize in now, and the struggles that small businesses have when they access credit through this sort of like personal experience, and basically we decided we wanted to work together.
Yeah, and I remember something I read online. Did this all get dreamed up? Were you in the Alps? Were you skiing or something? Is that?
Yeah, exactly. That was so yeah. We were on the last ski trip before the pandemic, so sort of March 2020. That was actually where I met Dom, which is funny. So Johannes and Dom had known each other a bit before, but the first time we met was just before the pandemic, and that's when we decided we want to work together. We were all passionate about this question of how do you expand access to credit on fair terms, and we thought that bank data was a good route for it. Now, that's a pretty broad remit, and that's sort of where we entered with. So how can we use bank data to help folks get access to credit? In the very early days, we worked with consumers and small businesses. So if you're a consumer lender or a small business lender, we would help you make sense of data, primarily that you were pulling through aggregators like Plaid. That was our sort of very initial product. But it became super clear that there's a much bigger burning problem in the small business world, particularly for relatively smaller dollar loans. So between, say, $10,000 and $100,000 for turning bank data into something that you can use to underwrite. And so, 2020, we started sort of end of 2020, had our first customers. And within maybe a year, we were primarily working on small business. And now, we work with about 130 B2B lenders, most of them maybe 85% in the US, and almost exclusively on this small business credit problem.
Yeah, and I know that, us at Intrepid, we really enjoy working with you guys and understanding, how you're addressing some of those challenges for the startup or the early stage companies, but you're also addressing some of the challenges for the lending businesses. Could you tell us a little bit more about how your technology works and makes it that makes credit more access to credit more accessible? And then how are you solving some of the challenges in the lending businesses?
Yeah, of course. So, I mean, we exclusively work with lenders, and I guess our idea is that, we make things better for the businesses by helping the lenders be better at underwriting businesses that are looking for credit. So, if you imagine, you're a small business and you're going through the process of applying for credit versus being a consumer and going through the process of applying for credit. If you're a consumer, you can probably log on to some sort of price comparison website, or you have an account with Credit Karma. They're pulling your credit reports, and just from that, they're able to qualify you into credit cards, loans, like all these other products. If you're a small business, doesn't work that way at all, right? Like you have this pretty painful process, even if you're working with excellent operators like you, Steve, where you've got to provide bank data, you've got to provide accounting data, you still probably have to pull personal credit, there's an application form, all the rest. So even the smoothest process is still, has a fair amount of friction, requires multiple different data sources, and that's still best in class. It's still this degree of friction. Whereas in the consumer journey, it's super fast. And at least the way we saw it, the main reason for that is because there's not like a single or relatively standardized data source that you can use to understand propensity to repay, as you can, potentially with something like FICO in the consumer world. And so what we're trying to do is help lenders to standardize that picture of a small business. And of course, there's many aspects to that, as you well know, as we've discussed before, where you can, put a standardized view of the financial data through accounting data, standardized view of the bank data, which is the area that we focus on, standardized view of sort of other aspects of the business. And so our goal is really for this bank data to help you take bank data that can be in any kind of format and put it into one standardized picture that you can use to evaluate the small business. In its simplest form, that would be, for example, taking like a PDF document and turning it into a standardized JSON. But in its more complex forms, can be providing a cash flow score, providing sort of revenue numbers for a business, indicating signs of distress in such a way that you, the lender, can then reach an automated decision. And that's something I'm very excited that we're partnered on.
Yeah, no, I love it, especially for early stage companies that might not have any credit score or DMB score, and especially outside of the consumer side of a FICO score, to be able to really quantify or say what are they eligible for in a unified standard process from a scoring system. So I really love that part. But one of the things that you brought up, Jamie, is you said data, you said aggregator, financials, which all bring me into the data and privacy protection. How are some of the ways that Heron Data is ensuring the privacy and protection of these companies' data?
Yeah, it's a great question. And it's obviously like extremely important. We're dealing with some of the most sensitive data that most businesses collect about their customers. And I think there's really two approaches. One is having a set of, company processes and operating procedures that mean that the risk of any kind of data breach or data loss is minimized. So, we have training, we have, a series of company guidelines that everyone goes through when they join to make sure that, we're treating all our customers' data with the relative, the degree of sort of care that it merits. And then the second piece is certification. So we want to make sure that having come up with these processes, we have validation that we're sticking to them, both feedback from external organizations to make sure they work. So we do a penetration test once a year, and certifications from bodies that can say like, yes, Heron complies to the standards that we expect from this industry. So we do our SOC 2 Type 2 certifications. We have ongoing monitoring from a company called Vanta that makes sure that at all times, we're complying to the standards that we've set out. And then, other things like, obviously there's local privacy laws to California, there's GDPR. Some of our customers need to make sure that the data resides in certain places, particularly the US, and doesn't leave it. And so, in that regard also, we'll basically dedicate resources to make sure that we not only make sure there's not a security breach, but we also comply to the security requirements of our clients that can vary a little bit client by client.
Well, I'm glad that you also got to go through the enjoyment of going through a SOC 2 audit. So congratulations surviving the audit as well. But
exactly. I wouldn't say it's the most fun I've had in my life, but it's probably one of the most important things we did. And because, again, of the type of data we're dealing with, we had to do it very early on. I think we had like 20 clients or something when we had to do SOC 2, which as a small company, it's not the most fun I've ever had.
Yeah, and not the most nothing to look forward to necessarily. You've got to go through it, but much needed. So, but
exactly.
And I like Heron's Data, right? So Heron's Data, your mission to empower actionable insights for your clients and for lenders. Could you give maybe an example or two about how the system would work and how a lender might be able to use some of the technology and the data that you guys, as well as machine learning that you provide?
Yeah, totally. So if I, again, sort of take a step back and think about the sort of things that a business lender is trying to do, you want to reach a high conviction decision as fast as you can, right? Because the faster you reach a high conviction decision, the more likely it is that your customer is going to accept, and the less it costs you in terms of man hours for processing and so on. At the same time, you want to be competitive, right? You want to make an offer that means that you make money, but also that it's going to be in line with other offers that a company might be making. So you want to get a high conviction decision to a competitive offer, and you want to make sure that you do it while keeping your costs in check, right? And if you can do those three things well, generally speaking, you're going to be able to build a pretty good business lender. And I guess those are the three KPIs that we try and move for our clients. So to give you just a couple of examples, I was chatting with a user from Heron Data yesterday who onboarded maybe 6 months ago. And when we started talking to them, they were looking at about 25 minutes, 30 minutes a file. So they would get in a set of bank statements, they would be reviewed. They would copy out some KPIs from the bank statements like revenue, balance, the kind of stuff that lenders always look at when they're trying to assess a company's creditworthiness. They would sometimes get fraudulent statements. They were checking them by eye. They hadn't had sort of major issues with fraud before, but of course, you never know when one's going to come in, and many cases of fraud are hard to detect. Just with your eyes. And now they're looking at about 5 minutes a file. So they went from 25 minutes a file to 30 minutes to 5 minutes a file, or a little less, because instead of, and they're not even integrated via API. They're still using a dashboard that we provide to them. So there's scope even to reduce that from 5 minutes a file to 1 minute or less, or even real time if they, when they put in the tech resources to building that integration. And so there you've got, speed, faster offers, more efficiency. So, if you're paying your underwriters $50 an hour, the cost goes from about being $25 just to review a file to being at most $5 or potentially even less to get to a decision. So that would be sort of one area. And the second area that we do a lot of work in is helping you make better decisions. So reaching a high conviction decision on even marginal cases. So in May this year, we launched our cash flow score that our customers use basically to look specifically at the bank data of a company. So that can be bank statements or data pulled from aggregators, and basically turns that into a likelihood to repay at least the principal. So it's a score of 0 to 1,000 that you can use to sort of stack rank your companies by creditworthiness. And again, there we've helped companies cut their losses by in some cases 50%, because they can basically pinpoint the folks that, again, not obvious when you're manually reviewing statements, but when you look at a larger data set, you can say, actually this company has stuff going on that we don't like. So, we'll throw them for review. We'll potentially reject them, just because this cash flow score is much lower than the one that we would like.
Yeah, no, I love it. I've told you guys multiple times. I love the scoring model. I love how you guys put this information in easy to read, and especially for the financial sector or the industry in general, and in fintech that utilizes data. I mean, what are some of the challenges that you think are going to come up that you anticipate in the fintech, financial, and data space in the coming maybe years to come? Or what do you think? Kind of what's your hypothesis on where the industry goes?
Yeah, I mean, we think about this a lot. There's a famous quote from Wayne Gretzky that says, "You should skate to where the puck is going." And obviously, we want to be solving the problems that we think the industry is going to have now, but the problems that are going to be solved one way or another in 10 years' time, because they're really important problems. And if we can be the company that helps lenders solve those problems, then let's hope things go well, and everyone's got us integrated in their stack. But I think the big area that I see is, I guess, the one that we sort of talked about briefly earlier. If you look at the difference in journey between a consumer and a small business, I don't see any way that in 10 years' time, it's still going to be the case that as a small business, it can take sort of days or weeks to reach a credit decision. The rates can be decided by sort of individuals. There's human eyes on the vast majority of files. You're already seeing an up creep in the sort of automated decisioning. If you look at folks like Square or Shopify Capital or Stripe Capital, these guys are offering fully automated decisioning using their in-house data. I think that's going to be the piece that spreads across the whole industry. And the question is, how is it going to get there? And that's where, as I say, and as we talked about, Steve, there's a question of how do you pull all this disparate data into one single source, create some kind of standardized report that a lender can build their automated decisioning on, and then pull the whole industry in that direction. And specific.
No, that's awesome, Jamie. I appreciate you joining us today and telling us a little bit about Heron Data and all the things that you're working on how you're making it easier for early stage companies to be able to access capital, and how you're working with the financial institutions and lending institutions to really standardize the process. what you've built is amazing, and we really appreciate being part of your journey.
Thank you so much for having me on, Steve. Absolute pleasure, as always.